Next method is collection accounts under special types of accounts category. So here collection accounts name itself says that this account collects the money from various parties. So let us see with one example. So this is a domestic example. So LIC has collection account in SBI Bank. So customers, LIC receives premium amount from all its customers. LIC receives premium amount from all its customers. Those premium amounts are deposited in collection accounts of SBI. So whenever that amount is required, whenever claims received, then this amount is withdrawn and gives to claimants. So here SBI just monitors the transactions in collection account. SBI does not have details of LIC premium paying customers and claiming customers. It just monitors the transactions in collection account of LIC. LIC has the details of its customers. Next, collection accounts are widely used by different ethnic groups in a foreign country to remit funds to the home country. So we need to discuss with an example. Here different ethnic groups means different types of people go to foreign country for employment. There they do some people may do for long term and some people may do employment, may work there for short period. Here generally some people they do not want to open an account in foreign countries because they they stay for short period, and also it is too expensive for maintaining minimum balance in foreign banks. So because of these two reasons, many people they do not want to open accounts in foreign banks. So here different ethnic group means different types of people. Some people may be labor, some people may be professionals. So different types of people go to the foreign countries. So there they stay for short period. For that short period, they do not want to open accounts in foreign country. But they need to send or they need to remit the funds, their income to the home countries for their family survival. For that, they approach money exchangers. So let us discuss with an example. So here, X is an Indian. He went to Dubai. He wants to transfer amount to his father who is residing in India. So he approached Western Union. This is a money exchanger. Western Union located in Dubai. So he approached Western Union in Dubai and he gives his money to the Western Union. He gives his income to the Western Union. So here Western Union has collection account in Citibank. So whenever X is given money to the Western Union, that money is deposited in the collection account of Western Union. That amount is withdrawn by the Western Union branch in India, and that amount is given to the X's father, either in the form of cash or it is credited to the X father's account. So this is the process how the money transfers from foreign country to the home country, or how the money or funds remit to the foreign country to the home country. So here Citibank does not have the details of X and X's father. It just monitors the transactions happening in Western Union collection account. Here, Western Union has very few details about the X and F. So that's why a foreign collection account receives payments from a number of unconnected immigrants in the source country. So like X, so many people deposit or deposit their money into the Western Union exchanges. So many people, they remit their funds to their home country through collection account technique. It is a legitimate purpose for foreign immigrants and laborers. So this process is the legitimate purpose. This process is involved for legitimate purpose. They are sending their income to the home countries for the survival of their family. So it is a legitimate purpose for the foreign immigrants and laborers. But this is used by criminal groups for their illegal activities. They transfer or convert their illegal funds to the legal funds because they know the benefits of this process. They utilize the loopholes of this process and they send their money to the targeted locations, or they convert their illegal funds to the legal funds. Next method under special types of accounts category is payable through accounts. Payable through accounts are maintained at financial institutions by foreign banks or corporations. So these accounts are maintained in banks by foreign banks. So let us see with an example. SBI as payable through account in Citibank US. SBI India has payable through account in Citibank US. SBI knows that so many its customers are travel to US. Customers are travel to US. So SBI has US customers. So it provided sub account holdership to these customers to payable through account. It provided sub account holdership to these customers for doing their transactions through payable through account. In this case, Citibank does not have any details of these customers. Citibank just monitors the transactions in PTA, payable through account. It does not have any details of SBI's customers. Foreign customers have signing authority for the account as sub account holders like SBI customers. These are foreign customers to the Citibank, and SBI provided the sub account holdership. SBI provided the signing authority to its customers to access payable through account. So these customers conduct normal international banking activities. This foreign bank means SBI funnels the deposits and checks of its customers into this single account, that is payable through account, which is held at the local bank. This SBI funnels the deposits and checks of its customers through PTA account, which is holding in Citibank. Many banks offering these types of accounts because they get commission from the exchange activity, currency exchange activity. They will get a commission. For that, many banks offering these types of accounts. but banks have been unable to verify or provide any information on many customers using these accounts. Citibank does not have the details of these customers. SBI does not know what these customers are doing, whether their transactions are properly pertaining to their business activities or their employment or not. These activities SBI does not have. So these two banks are unable to verify or provide information on many customers using these accounts. So this posing a challenge to KYC policies and requirements and suspicious activity reporting guidelines. So this is the problem. That's why these accounts are attracted by money launderers, criminals and terrorists. So they use these accounts for their illegal activities. That's why these accounts are attracted by terrorists, money launderers or criminals. Next method is back-to-back loans under cross-border trade or loans category. Back-to-back loan arrangements can be used for cash smuggling. Money launderer transfers his or her criminal proceeds to another country as security or guarantee for a bank loan, which is then sent back to the original country. Money launderers transfers their illegal money to the foreign countries, another country. There they avail loans by showing that illegal money as security or guarantee for the bank loan. By showing illegal money as security or guarantee, they avail loan. That loan amount is sent back to the original country or home country. In home country, they show that that is derived from loan, that is derived from legal source. That's why in this process they are converting their illegal money into the legal money. In this method not only gives laundered money the appearance of a genuine loan, but also provides a tax advantages. So in this process they are not only converting their illegal money into the legal money, or they are not only converting their illegal money into a genuine loan, and also they are getting tax benefits from both countries. That's why this method is attracted by money launderers. Next method under cross-border trade loans category is international trade or trade finance. International trade in goods and services can be used either as a cover for money laundering or as the laundering mechanism itself. So, let us discuss these two with the example. So, here Pushpa. Pushpa's main activity is smuggling of red sandal. So this is the illegal business. So to cover this business, to hide this business outside, he does export of furniture to Japan. So outside he is doing legal business, that is exporting of furniture to Japan. Actually, he is doing this business, this international trade for hiding, for covering this money laundering. So, this is the example for this sentence. Next, here Pushpa's business is just on papers. No physical existence of furniture business is there. Furniture business does not exist physically. It is exists only on paper. For namesake, he is showing papers and telling that he is doing furniture express. furniture business, but he is doing only laundering mechanism only. For outside, he is showing that he is doing furniture business, but no physical furniture business exists. That furniture business exists only on papers. So this trade essentially done by creating difference in the real value of goods exchanged and the financial transaction value by manipulating the quantity, quality or description of goods. So here let us see with three examples. See here, Pushpa exporting 1 ton, 1 crore worth 1 ton of furniture to Japan. In return, he received 5 crores and he has shown that he exported 5 tons. So he manipulated the invoice. Actually, he exported 1 ton worth of 1 crore. In return, he received 5 crore, and for that 5 crore, he has shown in the invoice that he exported 5 ton. That is, he manipulated the quantity of the goods or services in international trade. So this is the manipulation of quantity. One more, Pushpa exported 10 lakh worth cheap quality furniture to the Japan. In return, he received 1 crore, and in the invoice he has shown that it is a good quality furniture. He has shown that in invoice it is a good quality. He exported cheap quality, but invoice he has shown that it is a good quality good quality furniture. For that return, he received 1 crore. Here in this case, he manipulated the quality of the goods. In final case, generally Pushpa exports only sofas to the Japan, but in invoice he mentions he is exporting tables, cots and other furnitures along with sofas. Actually, he is exporting sofas only, but in invoice he is showing that he is exporting tables, cots and other furnitures along with the sofas. So likewise, they manipulate the quantity or quality or description of goods by manipulating these types of quality or quantity or description of goods. They create a difference in real value of goods exchanged and the financial transaction value. So in this method, trader pays large sum of money. Here Japan is paying large sum of, here Japan customers are paying large sum of money for goods which are worthless. These goods are subsequently thrown away or sold on cheaply. So in this case, Japan customer paid large sum of money for goods which are worthless goods, and these goods are thrown away or sold on cheaply. This additional amount here, 4 crores excess amount is received. So this additional amount remitted is credited to the launderer's account in the other country, not to the home country, that is sent to the other country. So another mode is illegal proceeds are used to buy high value assets such as luxury cars, aeroplanes, boats, which are then exported to third countries. So here what happens? Pushpa exported furniture to the Japan. Furniture to the Japan. So here he earned 5 crore rupees. So here in Japan, he purchases helicopter or cars or aeroplanes. So he purchased high value assets, helicopters, cars, or aeroplanes. So these are again exported to China. These are again exported to China. There he sold all these assets, high value assets. So in return he gets money. That amount is again back credited to Pushpa's account. So this is mentioned here. Illegal proceeds are used to buy high value assets such as luxury cars or aeroplanes, which are then exported to third countries. So in this process, mainly invoice manipulation is done for settle the balance between them. So that's why this method is attracted by money launderers and terrorists and criminals. Next method is offshore banks under entities in lax or lacking strictness jurisdictions. Lax jurisdictions have few regulatory controls or regulatory guidelines are lax, and also these jurisdictions provide tax benefits and secrecy protection. These jurisdictions, lax jurisdictions, have few regulatory controls or lax in regulatory guidelines and also provide tax benefits and secrecy protection. Because of these advantages, many banks have flourished in these jurisdictions and accepting money liberally, which facilitated money laundering. So because of these advantages, tax benefits, secrecy protection and regulatory control, few regulatory controls, banks have flourished, many banks have flourished in these jurisdictions. These jurisdictions include Singapore, Hong Kong, Bahamas, Bahrain, Cayman Islands, Switzerland, etc. So these are the lax jurisdictions. In these jurisdictions, deposit in these jurisdictions, in deposits in these banks could be in cash smuggled into these countries from other countries. So whatever deposits in these banks are all related to smuggled cash only. These are smuggled cash from other countries, not from home countries. They are encouraging to receiving deposits from smuggled cash. So that's why this method is attracted by money launderers or terrorists or criminals. Next method under entities in lax jurisdiction is shell companies. So this is very important topic. One or two questions will come compulsorily in the exam. So here shell company is just that a cell where no real business is conducted. Cell company is just exists on paper. It does not exist physically. Cell companies appear only on paper, does not exist physically. If at all they exist physically, they are not engaged in the business or manufacturing or trading operations. Cell companies does not do real business. They are not physically exist. They are appear only on papers. If at all they exist physically, they are not engaged in business or manufacturing or trading operations. If at all they exist, they have only local agent or low level staff. Does not constitute physical presence, means no operations will be there, just office will be there. In that office, local agent or low level staff will be there. No business activity or no manufacture activity or no trading activity will be there. They create legitimate transactions through false invoices and financial statements. They do legitimate transactions. For those legitimate transactions, they produce false invoices and false financial statements. By showing these false invoices and financial statements, they enter into the financial activities such as getting loans against securities and also paying taxes on profits. By showing these fake financial statements or false financial statements, they avail loans from the banks, they enter into the financial activities. Not only entering into the financial activities, in those financial statements they show that they earned profits. For that fake profits also they pay taxes. So clearly they enter into the financial activities, financial system. So there are even cell banks that look like banks but not engaged in real banking activities. So these cell companies or banks conceals the identity of the beneficial owner of the funds, and the company records are often more difficult for law enforcement to access because they are offshore held by professionals who claim secrecy, or the professionals who run the company may act on remote and anonymous instructions. So they hide the beneficial owner of the funds because some professionals are operating this account. So it is difficult for law enforcement to access this beneficial owner of the funds. These companies are used either at the placement stage or at the integration stages of money laundering cycle. So that's why these cell companies are attracted by the money launderers or terrorists or criminals for their illegal activities. Next method is credit and debit cards under cards or remittance product category. So these are used in two ways. In one way, they are used to use structured cash payment for outstanding credit card balances is the most common use of credit card for money laundering purposes. So here money launderers they avail credit cards from the bank and they pay outstanding, they use the credit limit and to pay those outstanding credit card balances they use their illegal money. So by their illegal money they repay the outstanding balances of credit cards, and also they do structured cash payments. So that means so X has availed a credit card, so that credit card limit is 2 lakhs. So every month he uses 1 lakh from this credit card and he repays that 1 lakh through illegal money. So this is a structured manner. Every month he uses 1 lakh and he repays 1 lakh. 1 lakh, 1 lakh. Like that, they do structured cash payments. Then nobody gets doubt. So to create that impression, they do structured cash payments. So these could be with relatively large sums as payments, and in some instances cash payments from third parties. X has X avail credit card from the bank. X uses the amount, but Y pays, Y repay the outstanding balance of X's credit card. So in this case, Y repays X's credit card by the illegal money because nobody monitors the transaction. So uh, all banks focus on repayment only, but where it is coming, nobody monitors. No bank monitors the transaction, how that borrower is repaying. So that is advantage for the money launderers or terrorists. In another way, cash advances from the credit card accounts, they take cash advances from the credit card accounts and purchase cashier's checks or to wire funds to foreign destinations. Here, these money launderers or criminals or terrorists, they withdraw cash from the credit card, and from that amount they purchase travelers checks or prepaid cards, and they send those to foreign destinations. In some occasions, cash advances are deposited into savings or current accounts. These could be used by terrorists in a targeted locations by using debit cards. See here, cash is withdrawn from the credit card, and that cash is deposited into the savings and current accounts. That amount is used by terrorists in targeted locations by using debit cards. So like in this manner, debit cards and credit cards can be used by money launderers or terrorists or criminals. That's why they attracted the this type of method, this type of process is attracted by money launderers or terrorists or uh, criminals. Next method under cards or remittance products is prepaid cards. Forex prepaid cards have made it possible to have cash funds available at call anywhere in the world at any point of time. These usually have lower threshold than the credit cards and thus restricting the value of funds available. So terrorists find it useful to avail these because these are not linked to any bank account. These can be used for procuring cash and used at a targeted destination. So these are the benefits of prepaid cards. Here prepaid cards are providing benefits to the terrorists or money launderers or criminals. See, anyone can be purchased prepaid cards by using cash, and those prepaid cards can be used anywhere in the world at any point of time, and also these have lower threshold value, and also these provide restrict the value of funds available. Main benefit is these are not linked to any bank account, and also these are used for procuring cash and used that cash into at the targeted location. So because of these benefits, this method, this technique, prepaid cards technique is attracted by money launderers and terrorists and criminals. Next method under cards or remittance products category is Brax-D change or money changes. These Brax-D change or equivalent services such as telegraphic transfer facilities and exchange services, which can be used to buy or sell foreign currencies, or foreign currencies, to consolidate small denomination banknotes into larger ones, or to exchange financial instruments such as traveler's checks, euro checks, money orders, and personal accounts. So these are attractive for the money launderers. So generally these money exchanges, Brax D changes or money changes, they do buy or sell foreign currencies, and also they exchange foreign instruments such as the traveler checks or euro checks or money orders. So the degree of regulation over these businesses is less stringent than that of the traditional financial institutions. If you take regulations are less stringent than the banks. So that is also one of the advantage for the money launderers. And in these money exchanges, their staff skills are lower and their systems and procedures relatively lax. Regulatory guidelines are less stringent, systems and procedures also lax, and their staff skills are lower. So these are the advantages to the money launderers or criminals or terrorists. That's why they are attracted to the this method for their illegal activities.